What is going on, YouTube? We are going to be looking at how big money controls the market and how they can manipulate a stock for a given period of time, and how that works so that in the future when you see it, you can use that information to avoid making a poor decision, or you can use that information to take advantage of an opportunity. And all in all, it's kind of discouraging when you first start trading. You hear a lot, oh, big money controls the market, and it makes you feel like it's impossible for you to be successful. But we're going to be looking at exactly how that works so that it makes more sense, and that way you can hopefully avoid taking a loss just by watching this video. That would be incredible. But first off, if you love regular tips and tricks that will help sharpen you as a day trader, please consider subscribing. That's exactly what this channel is all about, and I would really appreciate it. All right, so let's take a look here. We're going to be looking at DraftKings today. This is an example of big money wanting to push a stock lower over time because they are short this stock. So they are trying to profit off of the stock moving lower. And so we're going to be looking at an example of DraftKings being manipulated to the bear side. So first off, there are two parts to this manipulation. The first part is they have to build their short position that they're not going to play with. It's just going to sit there for an extended period of time, and that's going to be the position that they make all their money off of, and that grows and grows and grows. So let's take a look at this chart here. This is a 1 year, 1 day chart, and this is DraftKings' 1 day candlesticks. Let's just say, for example, we're just picking a random day. Let's say they're seeing this consolidation underneath of resistance, and it's making the stock look weak, and they want to take advantage of it and try to manipulate it to the downside because of that. And they build a position on, let's just pick this day here, for, let's say they short it for 100,000 shares. So that's step number one. They have to build that position for 100,000 shares short, which will allow them to make money off of the stock moving lower. And they're not going to play with that position. It's just going to sit there, and they're going to take a huge chunk of their liquidity to fill that order. And then the second step is they need to take a huge chunk of their liquidity to manipulate the stock daily to influence it to go down. And we're going to look at exactly how they do that. So let's zoom in here to a 15-minute chart. You can see that we have been selling off range bound for more than a week now in DraftKings. I have this nice range bound trading here, and it's starting to get much more volatile, and we're starting to see some fight back here. But all in all, this was being manipulated by big money, and I'll show you exactly how that works. They use these things that are called order walls or whale walls. You may have heard of them. And what they do is they take this massive chunk of their liquidity and they throw it into the market when, in this example, when a bull run is happening, because they want to fight the bulls. They throw it into the market at particular moments to discourage buyers every time the stock starts getting bid up. And I watch this happen live. I catch it happening every now and then. It just depends what you're trading. But back on Thursday's trading session, let me get it pulled up here. Where is it at? Here we go. So on Thursday's trading session, I watched DraftKings open the market. I was really interested in this price point, and so I wanted to see what was going to happen. And when the market opened up, it bid up really quickly, and then it just instantly stopped and consolidated and sold off really hard after that. And what happened was, when the price got bid up, out of nowhere, an order wall hit the market and discouraged buyers, and the stock sold off for the entire day after that. What does that order wall look like? So I use Webull a lot too. I always have it up on my other screen over here. And this is an example of what an order wall looks like. This is another stock. I just had a screenshot of it because it was a good example. I didn't get a screenshot of DraftKings the other day, but this is exactly what was happening. So typically what you want to see is you want to see a nice arc on the bid side and a nice arc on the ask side. It shows that everything is moving normal and it's healthy. And when that's happening, when it's more balanced, you're much more likely to respect retracement zones because more buyers and sellers are in agreement and or whatnot. That's another video though. But this order, they throw this massive order into the market only for a matter of minutes, because they're trying to discourage buyers from breaking that price zone. And all in all, what they're doing is they're trying to stop a run from happening. And when buyers see that information, they know that there's simply not enough available volume on their side to overtake that wall, and it discourages them and they leave the stock. Sometimes they leave it for the rest of the day. Sometimes they leave the stock for the rest of the week or an entire month, or they don't even trade it at all. And over time, when they're throwing these order walls into the market at opportune moments, more and more buyers keep getting discouraged. They keep leaving the stock, and they're able to control the overall price action and keep bidding it down. And you can see here on the next day, let's go to Friday's trading session. I was watching this. I wasn't trading it, but I was watching it because I wanted to see if we did get to resistance, if the same thing happened. And sure enough, the same exact thing happened. When market opened, we had this nice volatility and our order flow was healthy. Let me pull up Webull here real quick. This is what healthy order flow should look like. You want this nice balance on both sides. And that's exactly what the stock looked like when it opened. This is the same stock, DraftKings. That's exactly what our order flow looked like during all of this price action. And then once we got up to resistance here, sure enough, out of nowhere, an order wall hit the market and it made it impossible for buyers to break this price point. And then as soon as it starts selling off, this order disappeared instantly and we were back in balance again. Then the bulls started to take another run and trying to break out of this retracement zone. And sure enough, as soon as we got back up to the $39 level, another order wall hit the market and discouraged buyers. They left the stock, gave up for the day, and the stock sold off hard for the rest of the day. And they've been doing that. Like I said, these order walls are only in the market sometimes for a matter of minutes, but when they're doing that every time a stock is trying to break out, over time, every single day, they're able to discourage buyers, and every single day, more and more buyers are leaving the stock, and they're getting discouraged, and it becomes easier and easier and easier for them to keep controlling the overall price direction. And now, since they've been doing that every day with that huge chunk of liquidity, that initial trade that they opened up for 100,000 shares that they opened up many days ago is now up massive. And all this other liquidity that they've been using to create these order walls has really, it may have made them a little bit of money, but it really hasn't done much. All it's done, it's been thrown in and out of the market to discourage these bull runs from happening. And their initial position size for 100,000 shares is now up massive. And that's exactly how they can manipulate a stock over a period of time. That's exactly how it works. And so hopefully when you are trading in the future, you can use that information to avoid making a poor decision. I do use Webull and TD Ameritrade, and I'm always watching the order book when I'm trading something, and it has saved me from taking losses many times. And so I hope this is helpful for you. In the next video, what we're going to be looking at is how to use this information when you see order walls happening to follow a stock for an extended period of time and start measuring when it might make sense to start building a trade for a reversal. That's going to be in the next video. So if you want to check that out, please keep an eye out for that. All in all, I hope I've earned your thumbs up today. Thanks for watching the video, and I hope to see you in the next one. Take care.